All right, traders, the green streak continues. I'm going to be starting off this video by discussing tomorrow's trading plan with our new key levels. Then towards the end of this video, I'm going to be recapping today's overall price action and recapping some of the trades that were made, giving you a better understanding of the trading strategies that we're using to consistently profit within the market as we add another green day. With that being said, let's get straight into it. This is going to be a great lesson. This is the third day in a row where the SPY has tested $444, which was a previous major resistance level where a major bull trap triggered for big downside potential. The SPY has gaps to fill below. It also has gaps to fill above. What you need to understand is it is consistently failing to break above 444, and this is the third day in a row where the bears have put in lower highs on the SPY. It keeps on forming lower highs and it keeps on trying to push lower. If something cannot break out, then it must drop. So it's just a matter of time where true colors are about to be shown. So we must prepare ourselves for this, right? So let's start off with our new key levels. So first things first, we need to understand where we are in the market and what is currently happening, right? So the overall market has been bullish. However, we are at major resistance. 52-week highs, $444 right here. Very nice downside potential. There's a gap to fill below at 438. There's a gap to fill below at 431. This is the third day in a row where the SPY has tested that major resistance level. And as you can see, not only is it testing that major resistance level, but it's putting in lower highs each day. This is now the third day where we put in a lower high, and it's also putting in lower lows, which is overall bearish. So it's truly make or break. Now, in terms of what you need to understand and what we're going to be going over is this. So SPY closed at $443, right? So that's where it closed at, $443. So what we need to understand are these key levels. This is going to be very important here, right? So $443, this is going to be our overall key level, this $443. In order to stay and maintain bullish, it needs to hold $443. If they cannot hold it and stay within the zone of 443 support to 444 resistance, then the SPY is going to flip overall bearish and head back to support. And in terms of your support, you can see it's right here in the pre-market at this $441 level, right? So if 443 maintains a resistance level, that means the bears are gaining control. And they will then drop this to the next support level. The next support level is at 441.11 right here. Now, what you need to understand about this 441.11 is if the SPY goes under this and forms resistance, there's basically no support. It's going to start to crash and fill the gap below at 438. There's a gap to fill right here at 438.11 to be exact. This is where we would love to buy call options and love to try buying the dip, right? So it's just understanding we are truly at make or break in terms of the micro and the short-term price action. It cannot just sit at such strong resistance levels. It either has to break out or break down. Now, the bears are forming lower lows and they are forming lower highs, but SPY is still holding 443. So the bulls are technically still in this, and it's not truly confirmed bearish, but the bears are trying their best to flip bearish, but they're consistently failing overall. It's still, holding the zone. So what I need you to understand is it's kind of like a cliffhanger. Basically, what would send this super bearish, in my opinion, would be a crack under this like 442.65. If it cracks under this 442.60 and forms resistance there and maintains under 443, then we drop to 441.45. Now, as you know, calls at key support levels have been great dip buying opportunities, especially if you see a bullish 30-minute wick. So what are some key levels where we would like to buy some call options, some oversold levels? You can see right here, this was very, very key. This level right here, if we zoom out a little bit, this is key right here. $400, $440.25. This is previous resistance. When SPY broke above this resistance level, it had a massive breakout to retest 52-week highs. So another key level where we are interested in buying calls is $400.25. If the SPY flips bearish, we're looking to do calls there with a tight stop. If the SPY continues to flip bearish, we're looking to do calls at this level as well. These are all quick scalps. 438, When SPY drops down to close and fill that gap, it should start to see a nice overall reversal. So in terms of the strategies on what we're doing to understand, these levels, right? So 430 is a key level because this is a resistance level where the SPY had a massive breakout. Once it broke above this resistance right here, it had a massive breakout. So if it drops to that previous resistance, it should bounce first. Meaning if 440 calls go out of the money, they should spike back to in the money before going lower, even if it maintains bearish. And it could be a situation where it actually flips bullish. But we're not hoping for it to flip bullish. We're just looking to buy calls low out of the money and then sell them in the money. Meaning when price goes under 444, we buy the 444 strike that's barely out of the money, and then we sell when it spikes in the money. We don't hope for it to flip super bullish, right? We're just looking for a quick move where we can profit against the trend. And we're not hoping that the trend overall flips. We're just looking for a quick spike. Now, in terms of a level where I would say, the trend could overall flip bullish, even though we're not hoping or looking for this. But for those who want to kind of maybe hold for slightly bigger wins, leave some runners, go with the lower levels or strong confirmations on a bullish 30-minute chart. Wait for that confirmation as well. But it's just understanding here as well, 438 is a great level for calls. And the reason why is we have a gap to fill below at 438. So stocks can potentially have a reversal when their gaps fill. That's why we watch them very closely. And you could see this is previous resistance right here. You had very strong resistance at 438. It was never retested. It just gapped up and had a massive breakout, a massive run. So when it goes back down to fill this gap and touches this previous resistance, it should react to support and see some kind of reversal. So those are our lower levels for call options. We don't like buying call options this high at such a strong rejection zone, especially when SPY has been consistently failing to break out, turn into support. It's forming lower lows, forming lower highs. We don't like buying calls in this situation. So those are my current views on the overall market. Now, in terms of put options, we're looking for 443 to 444 to continue to react as a resistance. If we're seeing some sort of bearish confirmation on the 30-minute chart, we are looking to do put options at 443. The safest way to do put options, in my opinion, within this overall bullish market is to wait for key resistance levels or to wait for gaps to fill. And then when you see a bearish red 30-minute candle, look to do puts. This is how we were able to do puts towards the exact highs today. We waited for a 30-minute bearish candlestick. So for example, price gaps down, SPY gaps down, it opens up lower than it previously closes. When it goes to this white line, that's the previous closing price. That's where, SPY previously closed at. When it fills this gap, notice how it starts to drop when the 30-minute candle closes red. You can see right here, the gap closed, the 30-minute closed red, and then this was the beginning of the downtrend. You see how that works? When this 30-minute candle closed red, we were buying puts into the spikes of this candle because this is our confirmation that it's bearish. So if we see it spiking on the 1 to 5 minute, when it's spiking right here looking bullish, we're buying puts because our confirmation was this candle is red and bearish and it filled the gap. It's going to try to reverse now. We're not looking to do puts into a strong green bullish 30-minute uptrend like this. We're going to wait for a 30-minute red candle at a key resistance level that has not been tested, or at a major resistance level that has been tested, or at a gap fill level that's more overbought in price. So for example, this was a very special trade in this situation because 444 was major resistance. And you also had a gap to fill. And like I tell you guys, gap close reversals are very real. When stocks fill their gaps, they can have reversals. And if you use confirmations, the strategies work very, very well. So that's how we were able to buy puts literally towards the top today. It's just understanding, okay, SPY gap down. When SPY gaps down, we avoid puts because puts already banked. The people who swing traded puts did very, very well. The people who day traded puts at open got destroyed. This is why I mentioned within my watch list, you could see right here, we will likely fill the gap to $444 later. Avoid puts for now. SPY is currently at key support. We should bounce within time. I said that at 9:26 a.m. And then I gave out the key levels to be buying the dips. And then when SPY filled the gap and this 30-minute flipped red, I started buying puts into the spikes. When this 30-minute candle was spiking and looking bullish, I was buying puts because I got confirmation of a red 30-minute candle and a double top right here where it failed to break out for an hour straight. So if it can't break out and it's at the best resistance level for an hour straight, you got to hit puts after that 30-minute flips red. You look for 1 minute, 5 minute spikes. That's your confirmation is it filled the gap, it failed to break out and turn into support for an hour, and it has a 30-minute red. So you just wait for the price to spike to key levels when it looks green and bullish on the next 30-minute, and then you buy puts. That's what I'm simply doing, right? And I hit that twice, did very, very well on that. That was the overall best trade idea that I had on the day. But I did overtrade a little bit. I had two trades that were not good entries after that. I had two trades. I was breaking rules. The entries were not good. If I would have held them, I would have went green to red on the day. But for those in the chat, even though my entries weren't good a couple trades after that, you are well aware on how fast I cut my losses. I cut my losses within 1 to 2 minutes of move against me. And if I would have held just a little bit longer, it would have been a much bigger loss. But I cut my losses so fast. That's how I'm able to stay in within this game. It's not having big winners. It's having such small losers and getting out extremely quickly. So with that being said, man, that was the main trade and the main play of day. So one thing I've noticed is on the slower days, people can make more mistakes. They'll have the itch or need to trade. So in that situation, you really need to let go of your fear of missing out, and you need to wait for a great price to hit. You need to wait for a key oversold or a key overbought level. You should have price alerts set, low of day, high of day, previous highs, previous lows, key levels. So like, what are some key levels? Well, there's some nice bottom wicks here on the 30-minute. Like we've been discussing, SPY's been spiking on the low of these 30 minutes, and then surely enough, that's where it bottomed on the retest of these low 30 minutes. It's 442 support level, right? Like we had mentioned within the watch list in pre-market, the key support levels to watch for dip buying opportunities are at 442, because as I've been telling you in these videos, SPY loves to bounce at the low of these 30-minute wicks. So if it's going to gap down and the bears are going to win on their swing trade, most likely outcome is it's going to bounce at the low of these 30-minute wicks and then try to squeeze back up to fill the gap. Another reason why I said we were bullish in the morning and to avoid puts was this right here. Pre-market, this looked very bullish to me. So I want you to keep an eye on this, man. Take a look at this. And technically, this isn't even considered real, but I use this and it tends to work. Look at these spikes, man. You see these spikes on the 30-minute? I look at that, and when I'm seeing that, I'm saying, okay, there's like a magnet. It's going to try to gravitate towards the high of these wicks. It's going to try to fill the gap. That's another reason why I was bullish, because I looked at the price and I said, okay, it's already bouncing off of 442. That's key support. And the 30-minute candles have been consistently bottoming at 442, right? So it's already bouncing off our key level. And then when I saw these wicks, you can say it's real, fake, like whatever. It doesn't matter. Like when I visually see this, it tends to have like a magnet and gravitate towards the high of these wicks. So I'm looking at these candles, right? Whether it's real or not, I'm looking at this and I'm saying, for an hour straight, it's showing very high wicks right here. So what I want to buy puts down here and get trapped, it's likely going to gravitate back up to fill the gap. And we all know, if you've been watching my videos, I told you guys, the worst thing you can do in this market is to buy put options at support. And if you read the chart and if you listen to what I said in these videos, the 30-minute candle wicks is where the bounces have been occurring. There's a 30-minute candle wick right here, and then you can see it retest the wick, it bottoms out. There's a 30-minute candle right here, and then you can see it retest the wick, and then it starts to bottom out. Plus, you have these top wicks, and you have a gap to fill below, so it's going to try to gravitate towards that price. And then the way you bank on puts is you wait for it to go back to the high end of the channel. You wait for a 30-minute red candle, and then you can combine that in terms of a nice trend reversal confirmation where you can hold for a bigger win is a 30-minute red candle. Notice how the trend flips bearish for the short term once you get the 30-minute red candle at major resistance and at the gap. This is exactly what we're looking to do at the lower levels. At $400.25. We're going to be looking for a green bullish 30-minute candle. At $438, we're going to be looking for a green bullish 30-minute candle. Those will be very nice trend reversal plays for the short-term scalpers if you get in and out within 30 minutes to an hour or an hour and a half, and you wait for a 30-minute green candle to form. You're not going to get 100% the best entry, but once you get that confirmation, you just start to enter when price is going against it. So like, for example, you got the 30-minute red bearish candlestick at the gap. So that's our confirmation. When this closes red and bearish, we want puts. But the best entry for puts was at the high. So what do? You just start buying puts on the next 30-minute candle when it starts to spike, when it looks bullish. When the 1 minute and 5 minute is trending up, you're buying puts into those green candles towards key resistance levels when it's looking bullish because it's already confirmed bearish. And that's going to get you the second best entry possible using that 30-minute confirmation. And then same thing for calls. If we get a bullish 30-minute green candle at one of our key levels, $400.25, $438, Once it closes green and bullish, we're just looking for small drops on the 1 minute and 5 minute. And then we're buying as it looks ugly, as it's crashing, because we're getting the best prices doing that. Those levels are where the stops are going to be hit. The stop losses are going to be hit. I'm telling you, a major key to scalping. I'll plug this here real quick. This is very good insight to scalping, and this is what I like to do on basically every single scalp that I enter. Let me find this video for you real quick. It should have the audio. If not, then I apologize in advance. But just listen to this or try to read the text here real quick. Just listen to this. This is very good insight.
People will put their stops at very predictable places. If you're an institutional trader, your job is to generate the liquidity to get into the position. You just can't press the button like us. So invariably, the market makers will not know where the stops are, or they couldn't be bothered to find out. But they know that most people will put their stop a tick or two below the last low. And invariably the market will go to where the obvious stops are over and over and over again. So I want to put my entries at the obvious stop. So the next time you're going to put a trade on, and just think, where would I put my stop? And just as you think that, pick something heavy up from your desk and smack it around your head. And rather than putting the order in, put the order in at where you would have put your stop, and just watch how many times the market goes to that.
So how can you take advantage of that? Put your order where the stop losses are going to be triggered. So for example, if we know we're looking for trend reversals at the gap, right? So what's the best confirmation we can use that's safe? It's not going to get us the best entry, but it's safe and it's confirmed and it works. So if we want a short SPY, we know 440 is major resistance. It's a great level to buy puts. We also know when it closes the gap, it could have a reversal. If the 30-minute flips red, best confirmation. So if you're seeing this strong green bullish uptrend, and then you're seeing in the pre-market right here, it literally tops the gap and gets crushed, and then you're seeing a bearish 30-minute red confirmation, this is your confirmation to buy puts when this 30-minute candle closes red. Now, you're not getting the best price, but you then have to ask yourself, okay, now that it's confirmed bearish and I'm safe and I'm going to have a higher win rate, I might not be getting the best entry. What can be the best entry I can possibly get where when I get in, I'm basically timing it perfectly? The answer is stop losses. Where are the stop losses going to be hunted? If you are bearish and you are shorting, where are you going to be stopped out? You're going to get stopped out right here towards the high of this, all the resistance levels when they think it's going to break out. $443.83, $443.89, the high of this, right? When it pumps back up towards the highs of these candles, towards that key resistance, that's where all the stop losses for puts are going to get hunted, and then all the sheep who are buying calls are going to get wrecked because it's confirmed bearish. So that's why when this is looking bullish on the 1 minute and 5 minute on the next 30-minute candle, I'm looking to buy puts where puts are getting stopped out and bears are becoming fearful. I'm becoming greedy when the bears are becoming fearful of getting stopped out and when the bulls are becoming greedy of hoping for a breakout with that 30-minute bearish confirmation. And then you just do the inverse of what I said with the call options. So in terms of the call options, if we're interested in buying at 438, for example, there's an oversold gap at 438. When it fills the gap at 438, if we get a green 30-minute bullish candle towards that level, it doesn't have to be the exact level, it can go a little bit lower, it doesn't matter. But if we get a green bullish 30-minute candlestick, then you have to ask yourself, okay, that's confirmation for calls. Now, where the stop loss is going to be set? They're going to be set towards the low of that candle. They're going to be set a little bit lower. So as it's dropping on the 1 minute to 5 minute, if you see it dropping on the opening of the next 30-minute candle, that's when bears are going to become greedy and they're going to get destroyed. And then that's when the bulls are going to become fearful because the price is dropping. But if you have that 30-minute confirmation, it's understanding if the move is going against them. You need to take advantage of that because stop losses are getting hunted and triggered, and that's where you should be entering. It's having that understanding because it's already confirmed your way. So if it's having a drop in price 1 minute, 5 minute, and you see stops are getting triggered and you see the bears are greedy and then the bulls are becoming fearful because price is dropping, you need to have the mindset of, wow, this is a better deal. Let me buy even more. Let me add some to my position. It's great that it's dropping, right? Because it's just a short-term move in price where the stops are getting hunted. So use that with confirmations. That's how I do that in a sense, right? And it works both ways. It just works phenomenal with the bearish trades. And don't overtrade, guys. I mean, just look at, we had such great opportunity for calls at open, even though some brokers screw people out of that with like wider spreads and then have trouble getting filled orders. I've heard some people complain about that in the morning. But in terms of puts, the best and easiest trade for puts was it filled the gap, it tested the best resistance level, 30-minute bearish red, best opportunities for puts. There is no excuse to not be green on the day. That was the best trade possible for puts in terms of confirmation. If you're red, you didn't trade that. And if you did trade that and you're red, that just means you continue to trade setups that weren't as good. I kept trading and the setups weren't as good. I had some wins, I had some losses. If I didn't cut my losses quick, then yeah, I would have flipped red on the day because I had some bad entries on trades after that. But I know how to cut my losses quick. But it's just having the understanding, if you're flipping green to red or if you're going to red, you're not patient enough or you're just not trading the best setups at the best prices. Like if you're just over trading, not trading the best setups at the best prices, or if you just don't know when to call it, raise your standards, man. For those of you who aren't experienced in living off your trading income, raise your standards through the roof and know when to call it. If SPY fills the gap and you get the 30-minute red confirmation and you hit puts and you do well on that, that's like the best trade of the day. That's an amazing setup. Then just walk away. Just call it for the day. Don't go taking big risk after that, right? The people you see who are trading a lot within the chat, they're very well experienced. Don't go doing everything it is that they're doing. You just need to focus on trading the best setups at the best prices. Don't overdo it. Know when to walk away. Don't risk a lot when you are up. Don't go red to green. Make your trades count. You should be making enough on your win to where you can walk away. You don't need multiple trades. You don't need all these different trades, all these different strategies. You have one nice trade, two nice trades, and then you just walk away and call it. The only thing that should pull you back in is a better trading setup for the day, right? That's about it. I get it. If you're more experienced, you're more professional, and you see more opportunity and you're going to risk some profits, you have the account size to do it, you're up nicely on the day. I completely get it, man. It's addicting, and some people like to gamble. I completely understand. By all means, if you're doing extremely well and you want to make some smaller base hits, then by all means, you can try and do that. But it's just truly not even worth it, man. Just focus on trading the best setups at the best prices. The best trade for puts took an hour. It took 2 hours to develop. It took 2 hours for this to close bearish and red. That was the best trade for puts. You hit that. You can do it like twice, and then you just walk away. That's it. And now you know what we're looking for on calls. So that's my overall thesis. That's my overall analysis. Now, for this to remain bullish, it needs to hold 443, and we need to break above 444. If we break above 444, then what you need to understand is, the next level is going to be 445.70. So you can see right here on the chart, the next level is going to be $445.70, the high of this. That's the next level where they're going to try to reject it. You can see what we're looking at on the daily is the next resistance level that has not been tested. That's where it's most likely going to drop. So if 446 puts go out of the money, it's likely going to drop when it goes to 446 and bring those puts back in the money for a nice quick scalp. And then if that breaks out and becomes support, then the next level it goes to is about 450, which would be the true best level for puts if this flips super bullish. That's my overall thoughts. That's my overall analysis. I encourage you to trade the best setups at the best prices. I encourage you to use 30-minute confirmations as trend reversals and as following the trend as well. And take advantage of stop losses being hunted. If you're seeing there's key support, like right here, bottom wick, SPY has been bouncing off the bottom wick. It hits the bottom of this wick, and then the 30-minute goes green. You're seeing that, right? So it's bottom wick right here, key support, big upside potential. Look in the pre-market. 30-minute price is green, right? That's bullish. All these wicks, it's going to try to gravitate towards this. There's a gap to fill above. It's going to try to fill the gap and screw all the swing trader puts who did not take their profits, right? Who got greedy. That's what's going to happen. So if you're seeing bullish 30-minute candlestick in price, take advantage of that by buying calls into the next 30-minute. Every single time it's dropping, you see that 1 minute or that 5-minute candlestick dropping, buy calls into the fear of that drop on the smaller time frame after you're getting that bullish confirmation. And then same thing with puts. If you see a 30-minute red bearish confirmation at the gap, waiting to fill above, at major resistance, buy puts after it closes red into the spikes. Look for 1-minute spikes. Look for 5-minute spikes, right? That's how you got to play this. You got to say, okay, it just confirmed that it's red and bearish on the 30-minute chart at the best price possible. So what am I going to do on the opening of the next 30-minute? I'm going to buy puts into green bullish spikes on the 1 minute and 5 minute chart. I'm going to buy puts into those bullish spikes. When it's uptrending, I'm going to buy my puts. And then in terms of calls, okay, we just got bullish confirmation on the 30-minute chart right here, green and bullish, 30-minute chart, gap to fill above, top wicks. It's going to try to spike, bullish confirmation at key support 442. Okay, let's focus on calls. When are we going to buy the calls? We're going to look to buy calls whenever it's downtrending, whenever it drops on the 1 minute and 5 minute chart. And then there's other ways. I understand sometimes it's just going to blast off like this and it's not going to drop. You just need to be looking for higher support to form. You need to be looking for strong bullish confirmations on 1 minute and 5 minute chart. And it gets deeper than that, man. So like, for example, what's some bullish confirmations? This is resistance right here at 441.70. It breaks above and then it forms a floor. It forms a bullish doji. That's all confirmations to buy higher in price instead of waiting for a bigger pullback, right? There's other ways to confirm if it's not going to, reject, and you should just get in at the opening instead of waiting for a move against you to get in the trade. The way you kind of do that is you look at the 30-minute patterns. That's a whole nother strategy. It's more advanced. I'm not going to be discussing that, but I'm just giving you some basic tips and tricks. It gets much more deeper than this. So with that being said, if you do want to be a part of Trader Society, it's going to be the first link down below in the description. It is a one-time fee and you get lifetime access to the course, to the video lesson library that's going to teach you all my unique price action trading strategies, how I read the market. It's going to help open your eyes in terms of how I view the market. I can give that to you and pass that down to you. How to read price action. That's what it's going to do. I trade the charts. I trade the 1 minute chart. I trade the 30-minute chart. I trade the daily chart, and I trade price action. I'm not using indicators. I'm not using anything special. It's just how I see the market and how I capture trends and patterns along with the time frames that I'm using to trade the chart and tuning out all of the noise, right? So if you want to learn how to master the chart, this is going to be the best program for you. And I'm going to show you exactly how to read it and how to master it through candlesticks, through platforms, through the chart software that we use, all that stuff. You also get access to risk management, position sizing, and mindset training. You also get access to the Discord server, the chat room, which is where you're going to see every single trade I make along with my analysis. This is by far more than just trade alerts and trade signals. You're going to be able to see every trade I make in real time, alerted entry and exit, but you're also going to be able to see my analysis, why I'm bullish, why I'm bearish, what confirmations I'm using to be bullish or bearish, whether that's a 1 minute, 5 minute, 30 minute. You're going to actually learn how it is that I'm trading so you can learn to see the market for yourself, so you can actually become self-sufficient. For those of you who like my trading and like my style of trading, you should like the chart and the way I see the chart, because that's all that is I'm doing. I'm trading the chart, and everyone sees the chart differently. It depends on what platform you're using. It depends on your experience with the overall markets. It depends on how you look at things, how you read the chart, how you see things, and what time frames you use. And in my experience, it has worked best for me with 1 minute, 30 minute, and daily chart, along with the mobile app that I'm using to trade. So basically what I'm going to do for you is I am going to show you how I visually read the chart so you can see it how I see it without me telling you how I see it. That's the goal, is to basically create clones of how I see the market, and then you guys will be able to be self-sufficient enough to know that you don't need me anymore, because you know how to see it and read it the way that I see it and read it. Therefore, you should be making the same trades as me. You should be getting in as I'm getting in, or right before me. You should be thinking the way I'm thinking. And there's people within this chat who are thinking and seeing exactly how I'm thinking. Walnut Man, he's an anonymous user who's absolutely crushing it now. He's trading multi-six figures. He's new to the program, and he sees it exactly how I see it. It clicks so fast for him. I'm very curious to see how it clicks so fast for him. One of the ways was he lost a lot of money at first because he was blindly trading and blindly following other people's alerts. But when he took a big hit, I've noticed he completely changed and rewired his mind. Now he sees things perfectly, and that's how humans learn. They learn through trauma, through pain, through loss. That's when it truly clicks, right? You can try to save someone from making mistakes, but the harsh reality of life is, for most people, you need to make the mistakes to actually go through it and to learn, to gain that experience. And then you start doing the right things. That's just how it goes, right? But once you have something that's consistently making money, it's just consistently doing those actions over and over again, and then it adds up as you're making money every single day. And then the past just doesn't matter anymore. You look back at the past with a badass story and just laughing it off because you're doing very, very well right now, right? So it's a growing process. But if you want to learn how to actually trade the best setups at best prices, how to learn and see the market the way I see it, this is going to be the right program for you. You get access to all my analysis within the market, all my confirmations, all my trade alerts, live trading streams, live trading voice channels, the moderators within the chat. We have plenty of great moderators in the chat who see it the way I see it, and they also have different strategies who see it the way that they see it, and they are truly exceptional traders. Big shout out to Jim C, big shout out to Willis within the chat, big shout out to Walnut Man, big shout out to Steven. There's plenty of great moderators, Dimitri, within the chat. who are crushing it and making 5 figures on a weekly basis. So if you want to be surrounded by us, it's the first link down below in the description. As soon as you join, you get instant access. It is a one-time fee, and it's lifetime access for a limited time only if you join now. With that being said, I'm going to be signing off. I will see you guys tomorrow live at Market Open.